Ladies and gentlemen, good day and welcome to Expleo Solutions Limited Q2 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Asha Gupta from E&Y Investor Relations. Thank you, and over to you, ma'am.
Thank you, Rutuja. Good afternoon to all participants in the call. Welcome to Q2 FY23 earnings call of Expleo Solutions Limited. The results and investor presentation have been mailed to you, and they are also available on the company's website. In case anyone does not have a copy of press release and presentation, please do write to us and we will be happy to send it to you all. Representing the management today, we have Mr. Balaji Vishwanathan, Managing Director and CEO, and Mr. Desikan Narayan, Chief Financial Officer. Mr. Balaji will start the call with a brief overview of the quarter gone by, which will be then followed by Mr. Desikan, who will be getting into the detailed financials. After that, we will start the Q&A session. As usual, I would like to remind that anything mentioned in the call which gives any outlook for the future or which can be construed as forward-looking statement must be viewed in conjunction with the risk and uncertainties that we face. The risk and uncertainties are included but not limited to what we have mentioned in the prospectus filed with the SEBI and subsequent annual report, which you can find it on our website. Having said that, I now hand over the call to Mr. Balaji. Over to you, Balaji.
Thanks, Asha. Good afternoon, everybody. Thank you so much. Pardon us for a couple of minutes delay, trying to get connected. Thank you so much once again for your interest in Expleo Solutions and for participating in the call. We have had a reasonably good second quarter for this financial year as well. There has been growth across all segments. We still see a reasonably good pipeline. Of course, there are the customers are getting a little more cautious in terms of what kind of opportunities are coming the way, and also how long the term of the engagements are going to be. So there is a little bit of caution considering the kind of macroeconomic factors that we are facing. However, we don't really see that to be or we are not ready to call that as a slowdown as yet. We are still confident that the digital transformation journey which all the customers have embarked on is still going to continue, and the opportunity that we have and the kind of capabilities that we have built will still be having a really good traction from a business activity perspective. We have been focusing on people. That's one of our biggest challenges in the entire IT industry, both in terms of attrition and in terms of recruitment. We are also looking at making a bigger investment in 2023, considering the kind of opportunity set that's likely to come by, and probably somewhat similar to what we did in 2021, where we had more than 500 plus graduate hirings that we did. This year, 2023, we may probably do something similar as well. While in 2022, it slowed down a little bit in terms of hiring because we had a significant number of resources who were to get filled. We also had some amount of attrition numbers. I'm sure that there will be another question on that. The reason why the attrition numbers are higher is primarily because we were also looking at the cost, and people who were not getting billed were actually, that was more of an involuntary attrition where the capabilities are not matching what our requirements were. And apart from that, we also had quite a bit of CSR activities which we did in this quarter, focusing on both environment and education. The merger of the entities, there has been some progress with some of the NCLT hearings, and we still hope that we should be able to complete as per our original schedule of December 2022. That's all I have as an introduction. Desikan, over to you for you to go through the detailed financials.
Thanks, Balaji. Good afternoon to all. Another good quarter with the revenue reaching 131 crores and EBITDA 22%. We take you through the quarter-on-quarter and half-yearly performance. Quarter-on-quarter, revenue for the quarter improved by 3.6%, ending 131 crores against 127 crores last quarter. EBITDA percentage is 22%, and which is an improvement of around 117 basis points. PAT was almost the same as previous quarter, ending at 13.9%. On our half-yearly performance showed a growth of around 39% in revenue. EBITDA in value grew by almost 65% against previous quarter, majorly contributed by revenue growth with cost. Majorly contributed revenue growth in the cost not being the same as what the previous percentage on revenue is. Earning per share improved by 45%, ending at 33.9. And on the update on merger process, currently for the unlisted companies, it is the official liquidator of each state has to submit the report to the respective NCLT. Once that is over, NCLT of those states will take into consideration before the pronouncement of the order. With respect to NCLT Chennai, they have sent as a process, they have sent it to the other regulatory authorities for the representation, if any. The next hearing is around the third week of December. So we expect all to close by end of the year. We are keeping our fingers crossed. And one thing to update is on the DSO. I think last time to this time, the DSO was almost a one-day drop. The major reason is we had, as mentioned last time, we had one of the clients which had an internal system change, due to which the payment got delayed. We do see the same spillover during the quarter. Other than that, a couple of clients in India and Middle East, we had some delay in payment, which we expected to receive it by this month. So overall, the target and the expectation is to further reduce the DSO in this quarter. So that's the overall update about the quarter. Now we've opened the Q&A session.
Thank you. We will now begin.
One thing is that I think Ralph has joined the call, I think. Is it true?
Yes, he is connected.
Can you, Asha, can you just introduce him, please?
Yeah. So we have also Mr. Ralph Gallison, Chairman and Non-Executive Director of Expleo Solutions Limited and Global Executive Committee Member. So we will now start the Q&A session. Thank you. Ruchita, please take the questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abhishek Singhal from Naredi Investments. Please go ahead.
Good afternoon, and thanks for taking my question. First question, there has been a sudden increase in loan which was of 19 crore in March. It became 61 crore in September. So give details. And also you have given loan to your group entity for how long and when will you take it back?
Okay.
And second question, yes, sir.
Good, please go ahead.
Second question, is there any capex plan for FY23 and FY24? And where do you use the cash you have?
Okay.
Thank you, sir.
Thanks, Abhishek, for the question. See, with respect to the loan, what we talk about is that it's basically what we have done is that there is a group cash pool what is maintained in the group. So from the subsidiary company, we do transfer the money into the cash pool. It is more from an investment perspective. We move it to that cash pool, which gives us a better interest compared to what we are having it in the bank account. So if you look at the bank account in the respective geography, we don't get much of interest out of it. So that way we see that it's a good opportunity for us to earn a better interest. That's the thing which we have put in, and we have parked some of the cash, excess surplus cash what we have in there, so that we get the better interest. And
sir, how long time? For how long time?
This is a very short term. You see, if you look at it, this cash is I can get it in 1 day's time. Actually, the agreement is within 3 days we can get the cash back. So there is no term for this transfer of cash. It's a daily. We can get it at any time. So it is on demand kind of investment what we have. So that way we feel that it is safer, and also interest also good. And your second question I missed it. About capital investment, right?
Yeah.
Currently,
I'll take that for a second. Yeah, we do have plans of capital investment primarily from expanding our capacity. We are running short of capacity in Bangalore. We may also find requirements in 2023 for requirements in Chennai as well. So we are making some investments. We're not going to buy anything, but it's primarily around leasing and some amount of investment for making up that particular place. And the other investment that I talked about, which we mentioned earlier, is on the people. Rather, we are planning to hire graduate trainees in a similar scale as what we did in 2021, around 500 to 600 people over the course of the year, not in one shot. And there will be an investment for training them and upskilling them as well. So these are the bigger investments that we see at this particular point of time.
Thank you. The next question is from the line of Romil Jain from Electrum PMS. Go ahead.
Yeah, hello sir. I hope you can hear me.
Yeah. Yes, sir.
Yes.
Yeah, so I just want to understand how is the US business doing, and what is the plan there? How can we scale up, and some targets effect?
Yeah, so I talked about this in almost all the investor calls mentioned earlier as well. So US is, of course, an important geography, but we are not looking at US at this particular point of time because we have enough opportunity. US will require a significant amount of investment, and we will plan our engagement in the US in line with when the group also looks at a larger acquisition and market plan into the US. At this particular point of time, we did a data management acquisition last year or last couple of quarters back, and that is what is contributing to the growth in the US. From the earlier single digits that we had in last year, now we are close to around 13% of our business is coming from US, and we expect that to be in the same range of 13 to 15%.
Okay. And sir, if you can just help me with guiding on the consolidated margins post the merger is complete. Where do we stand, on a more sustainable basis? And lastly, just on the digital part of the business, if you can just explain how is it different from what we were doing earlier, and so the entire digital aspect.
Desikan, you want to take the post-merger margin question?
Yeah, post-merger margin, we are expecting to on the EBITDA we are looking around 16 to 18% is the post-merger margin what we are looking at for now.
So, sorry sir, how much? Can you repeat that?
Around 16 to 18%.
16 to 18. Okay.
And from a digital transformation piece, from the earlier way of primarily focusing on functional and manual testing, we have done a transformation over the last 5 years, moving into DevOps automation. We also started with some amount of software development as well, primarily fixing what we are identifying as issues. And the legacy modernization because most of our customers who have legacy platforms moving from those platforms into the newer platforms, we are supporting them in both configuration, testing, installation, moving into cloud. All those are the ones where we are focusing on, and that's what we classify as digital in our services.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, please limit your questions to 2 per participant. The next question is from the line of VP Rajesh from Banyan Capital Advisors. Please go ahead.
Hi, thanks for the opportunity. Just Balaji, if you can share the numbers for the unlisted entities which are going to get merged, how did they perform in this quarter?
Yeah, I will take it up, Rajesh. Hi, Rajesh.
Yeah. Hi.
For the quarter 2, they had a revenue of around 95 crores and an EBITDA of around 18 crores, which is around 19% EBITDA.
Okay, great. And then the second question is, since Ralph is also on the call, what is the group plans for growth in calendar year 23, given the macro condition in Europe is being described as very challenging? I'm just curious as to what kind of growth opportunities we are looking at the group level.
Probably with respect, and we are. Yes. First of all, good morning, everyone. Or hello. It's still good morning at my side here. Growth opportunities. I think on the one hand side, as we are generating significant revenue at the group level in Europe, there are certainly some challenges. Energy crisis, the war in the Ukraine, that is definitely creating a market environment that is challenging on the one hand side. But on the other hand side, we see in the industries we are in at a group level, and its significant part is in our aero, defense, and even in the automotive sector, we don't really see a slowdown of the customer investments in digitalization. We see still in the automotive sector a strong shift into the software-enabled cars. We see a lot of effort in terms of robotics to even streamline and digitalize processes even in the aero industry. So from an investment perspective, and this is even confirmed by our customers, we do not see a slowdown in their investments on all what is around digital, and we even see as they are still going into their normal cycle, even to develop new products, new cars, new aircraft. We can even see there that there is still good demand, and they're very cautious on the one hand side. Decision cycles will be shorter. Even there are sometimes some shifts even before even contract will be awarded. But overall, despite the overall macroeconomic climate, we can see quite a lot of confidence with our customers that they will continue on their transformation strategy, even besides the banking and insurance segment that was already covered by Balaji.
Does that answer your question, Mr. Rajesh?
Yes, thank you. That's very helpful. Just a quick follow-up. What kind of revenue growth are you expecting in calendar 23 at the group level?
At the group level, we had this year a growth of around 25%, and we are even expecting that we will outperform the market in 23, so that we are again expecting even there in a growth that is definitely closer to the 20% than the 10%.
Okay, wonderful. Thank you so much.
Thank you. The next question is from the line of Dipen Shankar from Trustline PMS. Please go ahead.
Good afternoon, everyone, and thanks a lot for the opportunity. So firstly, wanted to understand how has been the order book pipeline for us, especially in Asian and European markets.
Depends. The order book is not very different than what we had when we started 22 as well. So normally our customers actually give us orders for a period of, the max period is 1 year, and then they keep renewing it as we go through the transformation project. There are a few of them which goes multi-year, but mostly it's all in that 6 months to 1 year range. And if we have to look at where we are going to start our 2023, at least 70 to 75% of whatever we were doing in 2022, we still have a confirmed outlook. We still need to add, the growth that we are targeting to do in 2023 as well. But at least 70% of whatever we would be doing in 2022, we should be having an order book for that in 2023. And we need to keep adding the same thing, because most of it would be renewals, and then we need to add on top of it the growth that we plan to do in 2023.
Okay. So what are the reason specifically for digital revenue Q has dropped by around 3%? So are we seeing some slowdown in that segment specifically?
No, we are not seeing any slowdown at all. It's just that the base is growing. So, it's not the same base as what it was earlier. So, last year we could double from where we were. Obviously, the base has also grown. So, in terms of actual numbers, the absolute numbers, the numbers are growing and significantly growing as well, much more than what our normal growth percentages are. But in terms of percentage from the last year or last quarter, is lower because the last quarter's base has become bigger. So in terms of absolute numbers, we are growing, and we don't see any. That's where we see most of the actions as well.
Okay. So earlier we used to guide for Q-on-Q growth of 7 to 10%. So currently we are running lower at that level. So are we still maintaining that 7 to 10% Q-on-Q growth for the remaining quarter?
No, the Q-on-Q 7% was for what we did earlier, what we did last year. So now we are actually at our base. So the same, the base effects depend. So
okay.
You have to look at the absolute numbers. The numbers will be significant enough, but obviously the previous quarter numbers are higher. So adding 7 to 10% quarter on quarter would basically mean that we'll grow at almost 60% in a year. So that's not the ambition, at least at this particular point of time, to grow organically. Our ambitions are in the range of 25 to 35%. So for that, the current growth rate, that's what we are projecting, around 4%, and that too, some of it is because of also the euro depreciating against the rupee or against the dollar as well. So that also is playing an effect because we have a larger euro exposure as well. So other than that, our target is to do anywhere between 4 to 5% quarter on quarter.
Thank you. The next question is from the line of Anuj Sharma from M3 Investment. Please go ahead.
Yeah, thank you. Am I audible?
Yes, sir, you are.
Yes, Anuj.
Yeah. Thanks. See, I have two questions, both on capital allocation. One is we have given the loan to the parent at, as per annual report, at 4.4% plus LIBOR. However, when we see the interest from related parties, it's a 1% yield. So just trying to understand where is the gap of actual yield versus the intended yield?
Maybe I just need to take this thing. Currently, need to calculate it, because if you look at the interest rate, what you have taken is based on the current market condition, what we are doing, and whatever we have given it based on the LIBOR basis. So,
Anuj, we also need to look at when the loan was actually disbursed and what is the timeline as well. So it is not that the entire quarter the amount of.
No, I'm not talking about the quarter. I'm talking about the year.
Based on that. Yeah.
Balaji, I'm actually talking about the year. So FY21 opening balance was 19 crores and ending was 19 crores, and the interest received is roughly 2 crores. 20 crores, yeah. Or 2 million, sorry. So it's 1%.
This, whatever the loan, what we are giving is started only at the end of last quarter. So prior to that, it was more an FD interest, which was lying in Indian bank, which have been getting to term loan or a short-term kind of a fixed deposit what we kept. Now, if you look at it, all the what was the surplus amount what we had in the subsidiary bank account, which never used to get any interest. What was the surplus? Now we are putting it in the cash pool of the group, which is now getting this LIBOR rate. So I think it's a very I can say that it's only a 2 to 3 months old kind of a thing. So that way you can't compare it with a year number with the 3 months. If you look at our interest income compared to that has increased from last quarter to this quarter. But again, that is the thing which we can see it as been comparing with the whole year. I don't think that we can do that in a yearly thing, which will take time. If we're going to continue it further down the line, then it makes sense. Otherwise, this is a very short-term kind of a timeline to check on that.
Okay. Balaji, Desikan, sorry, I'll reiterate the interest is 1% for FY21-22 for the whole year, but we'll come back on that. My second question is, look, we have been reluctant to give dividends for the past 3 years, 19, 20, 21, in fact 4 years, and we have prioritized loans to related parties over dividend to shareholders. So, what's the thought process over here? The loans are now 20% of net worth, yielding just 1%. And how are the independent directors really comfortable with this?
One thing is technically it is because they are putting it as a loan. Actually, I'm not seeing this as a loan. I'm seeing this as a parking of my surplus cash in a place where I get better interest than what I get it in bank. That's the way I look at it. Maybe because the way it is mentioned it as a loan, it is not actually loan. It is more from my side. It is more a parking of my surplus cash. So that way, even the independent has looked at it. See, we are not. I don't want to compare it with the dividend what you're talking about, because currently, if I look at it, I have the surplus cash, because any time in 3 days time I can get back the money. So that way I can't compare this as a usage of my cash for a loan. I see that as a usage of my cash, the surplus cash, to earn better interest. So that way I don't take that as your comparative as a loan is not something which I'm looking at it. We are looking at it from a perspective of using the surplus cash for a better interest, rather than using it for a low, for a M&A or paying dividend. That comes with the, even currently I have that money. So I think there are two decisions are completely different from each other. So that's something which I want to tell you.
All right. And just one follow-up, Desikan. So why aren't we getting money back to India and deploying it at a higher interest over here? So, again, it's basically a capital allocation decision, which I'm really not really sure how the management and the board is thinking about it. But really, it's a suboptimal capital allocation decisions. The capital or the surplus cash has been deployed.
Not really, Anuj, because we, like what I mentioned earlier as well, our exposure is not on US dollar. US dollar is the only one which is appreciating. Whether it is pounds or whether it is euros, if I were to actually bring that money back from any of these countries into India in the last 6 months, we would have only ended up losing rather than gaining. And if we keep it there for a better time, it will only help. And if we were to do an M&A at a later point of time, similar to what we did 6 months back, and if we have to make the payment in euros or any other currency, it's a better option for us rather than bringing the money back to India. That option always exists, but these are decisions that were taken after considering those factors as well.
So Balaji, do I conclude the capital which is overseas will find it difficult to find its way back in domestic accounts?
It will come back if those currencies appreciate, and if we find a better return, we'll bring it back. Like what Desikan mentioned, these are all on demand. If we need the money, all we need to do is give a 24 hours notice, and within 72 hours we will have the cash available for us.
All right, Balaji. Thank you.
Thank you. The next question is from the line of Rohit Balakrishnan from iThought PMS. Please go ahead.
Yeah, hello. Am I audible?
Yes, you are.
Yes, Rohit.
Hi, Balaji. Hi, Vishnu. Hi, Dan. Congratulations on a very good set of numbers. So I have few questions. So one, just one on bookkeeping. So I think you mentioned the revenue and EBITDA. Can you also mention the PAT for the unlisted entity? Just to, I think you mentioned it last time around. If you can just, for the sake of completeness, you can just mention that as well.
I could not get your question.
I was asking basically the profit after tax for the unlisted entities. You've given the PAT, EBITDA and revenue. You can just also give the PAT for the unlisted entities, profit after tax.
Profit after tax for the unlisted entity. 1 minute. So the profit after tax for the unlisted entity is around 11 crores.
Okay. Understood. And at a combined level,
just to be clear on that, this is an unaudited figure.
Sure.
Unaudited.
Yeah.
Yeah, go ahead.
And just also wanted to understand, I mean, I think we've been talking about coming out with a dividend policy for a while, but not been able to, I mean, just wanted to understand what is our thought process. As the previous participant also asked, we have not been on the dividend paying list for a while now. And I mean, just as a shareholder, while I understand your thought process from optimizing your earnings on these in a short term, but from a overall perspective, we've generated close to 90 crores EBITDA this first half on a combined basis. I know we have not yet merged, but just generally trying to understand what is our thought process in terms of redistributing cash, utilizing cash. You can just share some thoughts around that.
So if I look at it, one thing is, because we do discuss this about it, one aspect is also to be considered is that to get the merger done, that is the one major thing which is happening now. By hoping that by December that gets closed, then we have the combined entity coming in, and by the next quarter we will see that how the overall performance for the year is. So maybe that is one thing which always is the priority for now for the group, and also that is one priority which is not. That is one of the reasons that the decision of how to get the dividend done is something which has been little postponed for now. Other thing is, of course, the group is also looking at the M&A activity, how we can use the cash better. So these are the things which is currently going on, but the first priority is get it merged, and we are almost in the last leg of things. Hopefully, I'm just thinking my fingers crossed that we will get it done by this year, and we'll start the new year with the combined entity. So that's the current thought process which I feel. Maybe Balaji or Ralph can add to that.
Got it. No, I think this is very helpful. The other question that I had was that, Balaji, I think you're still, I mean, I think in the previous call you mentioned 6-7% quarterly growth. Now you're seeing 4-5, which is still decent. I mean, this slight moderation is on account of the macro concerns you see, or some, I mean, or just, I mean, is that the reason one should think for slight moderation? I know it's still good, but just to, yeah, I'm talking about the listed entity right now.
It's because of the base effect, Rohit, because the base keeps changing quarter on quarter, and that's the reason why we're talking about it. If you look at what we talked about in the last 2 years, we have been growing year on year in the range of around 35%. And we still continue to have that as our target to anywhere between 25 to 35 is what our objective is. Of course, we're not sure whether we'll, like what I mentioned, we live 2 quarters at a time. So that's the kind of certain visibility that we have. And I also mentioned when we started off that there is some amount of caution in terms of the decision-making process and the investments that the customers are willing to make as well. But the 4 to 5%, in my opinion, is still add to the same 25 to 35%.
Okay, understood. And in terms of the unlisted entities of this quarter, we've seen very strong growth. So will this kind of momentum, even on a higher base, will continue? Like you're now almost at 100 crores kind of quarterly run rate, 95 crores this quarter. So on this higher base also, do you see that those entities also growing at the similar range, or they could probably grow at higher rate, given what Ralph earlier mentioned, that they are all in areas which are in areas where the overall market is also expanding from a software point of view. So
where we see Rohit is that the growth is, we are seeing growth everywhere, but the only thing is that the term or the engagements that we are actually shorter term in terms of 6 months to 1 year. So we have to look at where we will land, and we don't really see any reason for us to have any doubts on the growth.
Thank you. The next question is from the line of Aman Vij from Asset Investment Management. Please go ahead.
Yeah, good afternoon, sir. My first question is on the employee strength. What is it today, and how much addition are we planning for this year as well as next year? Combined entity. I'm asking for combined entity.
So the combined entity, we are at around 4,200 people right now, and our expectation is that this year we did not add too many trainees from what compared to what we did in 2021. 2023, we are also looking to add a significant amount of trainees as well, around 500 to 600 of them. Our target is to get to at least 5,500 next year.
And any targets you have for next year?
5,500.
That is for next year, not for this year?
No, not for this year.
So this year it will be around what number, sir?
4,500 to 4,700. It is slightly lower than what we expected, but that was primarily because we had to take a call on cutting down on some of our costs, and that's why you see a bigger number on involuntary attrition or managed attrition.
Sure, sir. Second question is mostly to Ralph. There was this news of our parent RDN looking for selling of the Expleo group. If you can update on that, and what are the thoughts on that part?
I think probably first of all, as it is an earnings call for Expleo solution, I can certainly give some insights, but I think you even understand that it is not an Expleo Group's investor call. What I can confirm is that we are having a good relationship with our shareholder. We even saw some news in the market that were even a surprise, I think even for the shareholder, what was probably even a speculation in the market, what would happen. We know that we're having a very strong support from our shareholder in 2022, and I think we all can expect the same support from our shareholder, majority shareholder, even in 2023. Even we are aware that there were some on some of the M&A platforms, some speculations, but that is nothing that we can confirm as a fact.
Thank you. The next question is from the line of Sugandhi Sud from InCred Asset Management. Please go ahead.
Yes, hi. Congratulations on the results, and thanks for taking my question. I'll start off with the performance of the listed entity. If I just look at the geographical trends, Europe, both on a quarter-on-quarter and year-on-year basis, is very tepid, and I understand that there's a currency impact. So just that -2 to 2% sort of number. Am I right in calculating that the constant currency growth would have been in the range of 8 to 10%? And is there and as you mentioned that US we've had better traction. So I'm just trying to understand if 50% of the business is from Europe. So at a group level, at a combined level, our growth, is it coming more from, mining our existing clients, or is it, what 20-25% target we have? Is it predicated on, just adding new clients? And, how's the pipeline looking with regards to that?
On the constant currency, I think if it is quarter on quarter, the growth is around 1%. But if I look at year on year for the same quarter, the growth is around 47%. That is 35% what the
constant currency growth in Europe is 1% quarter on quarter.
Yeah, quarter on quarter is 1%. Year on year is 47%.
In Europe.
No, sorry. You're talking about Europe. I'm talking about overall number.
So you're saying that
it is Europe, so that can be taken into that.
You had a net benefit of currency movements on your reported numbers.
Actually, it's another way, right? If you look at the euro conversion, the euro has the INR has strengthened against euro, so that actually has reduced our growth.
So I'm just trying to reconcile the reported 2.8% growth to the 1% constant currency growth here you have just mentioned.
On the quarter-on-quarter basis, there are not much of a movement, if you see that. If I'm looking at a year-on-year same quarter, that makes a huge difference. Because if you look at the INR growth is around 35%. I look at it at a euro to euro, it is around 40-some%. So that is the one which I was comparing to.
So, if you were to look at it, just to clarify, I think your question is that are we seeing a slowdown in Europe, and are we, looking at a tepid growth in Europe? No, that is not the case, because we, as a company, are growing at the range of around 20+% year on year, quarter on quarter around 4%. If you take the currency effect off, it probably means around 2.8% or so. But the Europe business, which is coming in from the group, and some part of the business that we signed directly with our European customers, are also growing at a similar rate. So we are seeing the same 4 to 5% quarter on quarter and close to 20 to 25% year on year growth from the European market as well. We haven't seen any slowdown at this particular point of time, but at the same time, like what Ralph mentioned, there are customers who are re-looking at some of their projects, and that's why we are looking at it on a quarter-on-quarter basis in terms of how the situation is going to be for the next quarter or 2 quarters from now, rather than looking at a very long term, because things might change quite quickly.
Sure, fair enough. And just with regards to your unlisted entities, and also, first of all, the headcount numbers, I do understand that, there's an element of caution that you're building in terms of headcount addition, but honestly, at March call, you had mentioned a number of close to 4,300, and and the target at that time was for the financial year was higher. So
we wanted to get to 5,000 this year, which we are not doing right now.
Right. So, and I'm just trying to reconcile again with the 25% growth that Expleo Group has reported and the outlook they have, and also the potential for outsourcing that our Indian entities have from the group itself. So, with so much growth happening, why are we not trying to capture that, and why is the headcount addition not expected this year?
The reason why there was a significant amount of, I mentioned earlier as well. So last year, in the around end of the second quarter or early third quarter, we hired close to around 500 trainees who all became billable this year. So that is the reason why the revenue growth is not translating exactly into an headcount growth, because all those team members were actually getting billed starting from this year. And that was an investment when we did last year. And it will translate, and that's why I said that next year we are going to look at once again hiring another bigger tranche than what we did this year. And the digital growth also is actually not exactly directly proportionate to the headcount growth as well. While for any services company, the growth will also have to result in some amount of headcount growth. It may not be directly proportional. We will see headcount growth in 2023, but this year we were a little cautious on how much we wanted to invest because we wanted to make sure that the team whom we hired last year gets billable. Did I answer your question?
Thank you. The next question is from the line of Hiten Jain from Invesco. Please go ahead.
Yeah, hi. So first, it was a little bit confusing when you say constant currency growth of only 1% QOQ. So that is definitely lower than your expectations of 4%, right?
One thing, okay. True, that's lower than compared. See, that's the thing, right? Of course, it's lower than for this quarter. It is lower, but we are trying to talk about the base, right? If you look at the base from last quarter to this quarter, last quarter we had a 15 million revenue. Now this quarter we made a 16 million revenue. So if you look at the base for the last 3 years, we at 2 years before we were at the range of around 8 to 8.5, and then we raised to around 9 to 9.5. In the last year we went up to 9 to 11. Now we are at the range of around 13 to 15. So that way the growth has phenomenally happened over the last 3 years. So now between the quarters, now the growth has been lower because of the base, what Balaji was mentioning. So that is something which is really making a big difference, I look at.
No, so then if this base is here to stay, then your expectations of 25-30% is quite high, right? On this base, then you should ideally expect 5 to 10% growth given what you have done this quarter. So where is this confidence coming from? This base is here to stay now.
If you see from the quarter 1 to quarter 3, if I look at that, it is around from a 13 million we have increased around 16 million. So that gives us almost 20% growth in the each from the first quarter to the third quarter. So overall for the year, if you see, the increase will be almost in the almost to 30 to 40% will be the growth year on year, right? From the last year number to the current year number.
No, yes. So, but I'm saying, so there is definitely, so it's a sequential which will build up for your full year number.
Correct.
So these are the initial slowdown that is being seen because of base, because of whatever challenges you are seeing in the environment. And so that has to be, so I'm just trying to reconcile because at one point you are saying that this 4% is sustainable, but the delivery is not there. And so which is where I was trying to reconcile the two things.
So, we grew by close to 40% in the first half compared to what we did last year. And the expectation is that we would, when we close the year compared to what we did last financial year to this year, we will be in the range of around 35%. And that's what we are talking about so far in terms of what our expected growth rate from what we did in 2022 to what we will do in 2023, the financial year 2023. I'm probably not able to exactly make up what the question is in terms of is the question as to how you are confident that we will grow by 25-35%, or are you saying that the sequential growth is not adding up to the particular number? I'm not able to exactly understand what the question is.
No, so the question is that when you have your expectations of around 25-35% growth, then obviously sequentially, and you also said that sequentially we expect a 4% kind of a growth. But this quarter
4 to 5, yeah.
Yeah, so correct, 4 to 5, and this quarter was just a 1% growth. So which is where I was trying to reconcile the two. Or there is something which has happened this quarter which you think is not going to be there in the next quarter, which gives
The only expectation is the currency to be doing better, but there isn't really anything that we are doing. Q4 normally gets a little, or rather, gets a little slower because of the number of working days and other stuff typical to any other services industry. But we don't really see anything unusual.
Okay, maybe I'll take that offline. So the another question was that your unlisted entities, obviously there you're seeing a high growth. There also, if you can just give us some constant currency, and one suggestion would be to give us constant currency metric, because that's what all the IT companies do. That makes it easier because currency will not be in your hand, it's externally driven. So constant currency is something which the business is delivering. So if you can give that number constantly, it will be useful. And same if you can give for unlisted entities this quarter. And at the same time, what is the group contribution, both at the listed entity and the unlisted entity? The last number that I have, which you had given, was close to 21% for the listed entity and 45% for unlisted entity. What it is today?
As far as the performance is concerned, I don't have a constant currency working on the unlisted company. The total revenue for the quarter is around 95 crores and the EBITDA is around 18 crores. Maybe I will come back to you on the constant currency.
And the revenue share from the group for the listed and the unlisted?
Listed entity, the percentage revenue of group is around 18% for the quarter, or even for the year. If you look at it, 18% of the revenue is a group revenue, which actually we directly sign with the group.
And unlisted entities?
Unlisted, with respect to the Pune entity, it is around 85 to 90% is the group revenue, and with respect to the Bangalore entity, it will be around 15%, 10 to 15% is the group revenue. That's the combination of it.
Okay, so I have more questions. I'll come back in the queue. Thank you.
Thank you. The next question is from the line of Rohan Advan from Multi-Act. Please go ahead.
Yeah, thanks for the opportunity. My first question is on the margin guidance of the merged entity at 16 to 18%. If you look at it today, the listed entity is upwards of 20%, and in Q2, the unlisted subs have done 19%. So we are already above 18%, and with the merger happening, shouldn't there be some synergies? So why is the guidance at 16 to 18? Are we expecting, some more, expenses post the merger that should bring it lower?
See, this is only a guidance, so I don't want to, very deep on saying that, and we have always mentioned saying that we don't make forward-looking statements. It's only the guidance based on what we think will be the first 1 year of how we are going to integrate, what kind of, investment, what kind of engagements we need to have for the first 1 year. But of course, logically what you're asking is right, but, we would still like to stick to what we mentioned, saying that that's what our objective is, because we see, once we merge, it would not start generating synergies right from day one.
Okay, got it. And second question is on the unlisted entities. Q2 they did 95 crores. What was it in Q1?
Q1 was 85 crores.
Oh, okay. And just the last question, to get it right, what we are saying is that at the company level, the listed company overall level, our constant currency growth this quarter was 1% against a reported currency or against a reported growth of 2.8% in INR terms. Is that correct understanding?
Yeah.
Okay. Thank you.
Thank you. The next question is from the line of Faisal Hawa from SG Hawa and Company. Please go ahead.
So, sir, this quarter has been the first quarter that our digital revenues have actually degrown. I'm referring to the presentation made by yourself. I think it's page number 7. So, we have been actually having super growth in digital revenues. whereas this time, for the first time, we have de-grown. So what is the reason behind it? And secondly, sir, our clients which are above 1 million have fallen from 13 to 11 quarter on quarter, and clients from 0.5 to 1 million have also fallen from 17 to 14. So is this a worrying factor, and what is the kind of reason that there could be for this? Secondly, sir, how many new customer visits that we have had in this quarter for new contracts, etc. And our parent Expleo, is it listed, and what is the kind of ER&D revenue that we have on the parent level as a percentage of total revenue? And how much once the entities are merged, how much more outsourcing can we expect? It's at 20%. Is it possible that it could go to 27-28%?
So on the customer profile, I think compared to the last quarter, the current quarter, we are almost flat, because if you look at it is 17 same for 5 to 1 million and 1 million above, 17 and 13. I don't see that as a change. And the second thing is the addition of client is around 10.
I'm sorry, I've read it wrong. I've read it wrong. I'm sorry.
Yeah, and the client addition is around 10 in the quarter, which has contributed to overall. On the other questions, I think Balaji or Ralph.
On digital revenue, it is not, I had mentioned this, to another, for another question earlier in the call. Digital revenue has actually grown in terms of absolute numbers. If I were to compare it with the last quarter, then and because the total revenue has also grown, it shows us 39%, but we still have the same target of, crossing 40% this year and getting to close to 50% next year. So that's not changing in any way, and we are not seeing that to be degrowing in any way.
And if you could say something about the customer visits, and also, what are the new kind of M&A activities? Is it to do more with cybersecurity, which most global CEOs are citing as a big problem? And how is the company that we acquired? Is it leading to many more client expansion or new client additions for us? The one in the data management.
So we have multiple customer visits. If I were to look at how many customer visits, I would probably say that we are hosting customer almost every 2 weeks. So I don't know the exact number across all our centers. And in terms of what our areas of focus are, it's primarily in the digital space around automation, data, and also in terms of what will give us the legacy modernization capabilities as well. Ralph, do you want to add anything more?
There isn't probably from an M&A perspective, when you look at the priorities, it must have an impact even on our existing markets, and not only markets we are not in. So we would not consider even now an M&A activity in South America or Latin America, as we don't have a footprint there. So it's always a priority on markets, regions we are already in. It has a priority on industries. We have diversified even with the life science sector at the beginning of the year. And so now the priority is definitely even to leverage even within the industries we are aero, automotive, certainly banking, insurance, life science. And then we even see from an M&A perspective, it comes from capability around digital, what is software engineering, what is cloud, what is data. And not only security, this is a very special play. It is really more on how to leverage really and to support digital activities with our customers, where it even then has an impact on our global delivery capabilities. And I think we confirmed several times that our focus is and will be even India on this. So it is definitely more likely that even this will even then have a strong impact even then on our business in India. But it must even mean that it even brings some leverage in the region and in our existing industries, even beyond banking, financial service. As you know, we are even having other business activities in the country, especially after the merger.
What is our total ER&D revenue as a percentage of our total global revenues? Engineering and research and development?
Sorry, can you repeat the question? Sorry.
What is our engineering, research, and development revenues as a percentage of our total global revenues for the Expleo group? That is one. Second, are we a listed entity? And third, how do we plan to raise outsourcing to India from the current 20-21% to at least 26-27% once the merger is complete?
Okay, so don't get me wrong. I understood there are only two questions. I'm happy to answer three now, but so overall, the engineering part is roughly 2/3 of the group business. We are not a listed entity. We are owned by a PE fund. That's a minority shareholder. And the minority shareholder is still Assystem, what is an engineering firm listed at the stock market. And yes, we are certainly even consider even to bring more of the customer-related activity that we are even having today, and even what we are expecting that grows. This will even then include delivery from India. Yeah. So with the growth, even in the engineering segment, we are even expecting even there a more even accelerated growth even than in India, as more of the new initiatives will be in a distributed way, including delivery from India than the traditional engineering services that were more customer-led and more on-site.
Thanks a lot.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to the management for closing comments.
Okay. Thank you so much. Thanks for once again joining the call and asking questions. Hope we were able to answer most of the questions. And thanks for your continued interest in Expleo Solutions. Thank you so much, and take care and stay safe.
Thank you.
Thank you. Bye-bye. Thank you.
On behalf of Expleo Solutions Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.